Hey everybody, Paul Dunn over here at First Party Financial, and guess what? We had an exciting weekend. Man, we had the University of Arizona come in and really play some solid football and dominate their second straight opponent. Not only that, we had some terrific football all day Sunday, but football isn't the only thing that happened. On Friday, after the closing bell, the feds announced that they're taking over Freddie Mac and Fannie Mae. Wow, interesting. So, who were the players? Well, we had Henry Paulson, the Treasury Secretary, as well as James Lockhart, who is the director of the newly independent Federal Housing Finance Agency, and then, of course, Ben Bernanke. So, what happened? So what happened over the past week is that Henry Paulson, James Lockhart, and Ben Bernanke had some discussions along with many other folks, and they realized that Freddie Mac and Fannie Mae could not meet their goals, could not meet their objectives of providing stability and liquidity given today's market. So the two GSEs, the two government-sponsored entities, have been placed under conservatorship, say that 3 or 4 times, and are now under the direct control of the FHFA, effective September 7th. That's last Friday. And it's important to know that they are not part of the government, but they are still independently traded companies. So what it really means is that the CEOs of both Freddie and Fannie are now gone. They're kaput, they're bye-bye, they're out of the picture. And the FHFA has appointed new CEOs to run both Freddie and Fannie. And so Freddie and Fannie will be operating primarily as they always have, only now they've got some significant financial backing that's much, much stronger, so they'll be able to provide that stability and that liquidity for the market that we're in. Now, you may see, in fact, I'm very confident that you will see some tighter financial or some tighter underwriting guidelines coming, but we've already seen those in place. And since the tighter guidelines have been in place, we've seen much stronger, sound loans coming from Freddie and Fannie. Now, don't worry, you're not going to get a bunch of government employees running around underwriting loans, but you will see some tightening of the guidelines. And what this means for the taxpayer is now the U.S. government, also known as the taxpayer, is now in the preferred stock position and is guaranteed to get paid ahead of time prior to the old preferred stockholders, as well as the other common stockholders. Now, all dividends have been halted, and all political and lobbying efforts by these two companies have been halted effective immediately. And in return, the government does guarantee that these companies will not have a negative net value and will open up the doors to some massive abilities of needed capital. Now, the 3 main goals of this takeover are to provide some market stability, to actually increase mortgage availability, and also to protect the taxpayers. Now, you're not going to see the government come in and actually buy the failing mortgages that have already been written. They're really only going to be participating in the new mortgages from here on out. So what's this really mean to Arizona? What's it mean to the future of interest rates? Are they heading up? Are they heading down? They're going to be pretty flat? Or is it going to be pretty much all over the place? What's it mean to the real estate agents out there who have clients sitting in the back burners waiting to get into a home? What's it mean to the people thinking about refinancing a home or thinking about buying a new home, or even those who are thinking about selling? Well, I'll tell you what, our radar has in store that we believe that over the next 30 to 60 days, there's a very, very good chance that interest rates could fall as much as a full percentage point from the levels that they are today. We also believe that this will cause the potential for a little mini refinance boom. There will be a lot of opportunity out there to get lower interest rates, but the big thing that it should do is get a lot of first-time home buyers into some very, very affordable mortgages. With the USDA home loans out there, with the FHA home loans out there, there's going to be an awful lot of opportunities for first-time home buyers. Again, we're looking at the potential for the next 30 to 60 days to see interest rates fall from current levels by as much as a full percentage point. And really, one main reason why, with the government stepping in and taking over Freddie and Fannie, it has increased their strength, and it has increased the perception of their strength to foreign investors. And if you don't remember this, at one point in time, China has always been one of the largest investors in mortgage-backed securities in our country, but China eliminated 25% of their holdings in mortgage-backed securities. So again, with the strength of Freddie and Fannie, now we're going to see more foreign investors come back in and buy mortgage-backed securities, and it's a real opportunity that we could see interest rates really start falling over here. So with that said, if you know anybody who's thinking about buying a home or thinking about refinancing, have them give me a buzz, fill out the form. You can also shoot me a little email in the comment form here. If you're looking for a specific rate that may make things happen for you, shoot that over to me, and we'll put you on the special rate watch program. We won't bother you at all, but what we'll do is send you an email letting you know that, hey, it's here. That's it for now. Thank you for watching this video. Please forward it off to any friends that you may think would find it useful. And until next time, have a terrific day. Bye-bye.